All right, we are back at it. It's another Wednesday, which means it's another Ask Me Anything. And I've got the whole crew and some special guests today. So I hope you are all getting your questions ready, because we don't want any of that silence where you're just sitting there waiting for someone else to ask a question. Ask and you shall receive. So folks, stick around, grab your cocktail. I know I got mine, the Twisted Beak. Interesting sour beer, but whatever your drink of choice is, grab it, and we'll be right back with you in just a second. All right. Here we are back at it. Another week of Ask Me Anything happy hour. And we just finished up a really awesome wealth webinar where we got to really get into some fun stuff with Justin. Kearns Capital. It's a hedge fund, an algo-driven hedge fund, pretty wild. And then we spun that into the IBC side. So we should have a lot of questions on this as people start to join, because it turned some heads. It really did. I mean, we were talking about some things that people probably could never dream of. And, I just want to kind of do a little roll call here. We'll start up to the top with Mr. Stephen Nagy. So top of the hour, top of the year.
What's up, guys? Happy New Year. Welcome to Ask Me Anything Happy Hour New Year's edition. We're going to have some fun today. Lots of good questions coming in, and we'll hit them all. So put them in the comments, and let's get this thing rolling.
Nice. And we got Mr. Craig Yenny.
Yeah, Happy New Year. Craig Yenny here. Just looking forward to the discussion today, and lots of good questions.
Awesome. And Jason?
Yeah, first Wednesday of the year, Chris. So Happy New Year from City Beautiful. Blessed to be here, man. Excited.
Fantastic. And then we got our special guest who was on the wealth webinar and blew everybody's minds, Justin.
Yeah, it's great to be here. I loved being on WTF and the wealth webinar. So I guess round 3 now. Excited to keep it going.
It's like one of those whole day kind of things. Wednesdays we got all 3, and you joined us for each one of them, man. You made the marathon. Thanks for joining. Oh, yeah. And then we got a couple latecomers. We got Joseph, who's probably getting a tooth pulled or a root canal or something, but he'll be joining. So that'll be funny to listen to him talk after the dentist. And I know Hannah's just finishing up a podcast, so she's going to be joining. So real quick, I want to give a selfless plug, I guess is maybe what you'd call it. Today is a very unique day because back in October, well before October, I embarked on a really big challenge, a big mission, just a big anything. And it was a TED Talk, a TEDx talk. And I started the journey just thinking, oh, this will be easy. I speak all over the country. I speak all over, like I'll be able to knock this out of the park. Well, I didn't quite understand what goes into a TEDx talk. And I remember giving the first draft of the talk and the first video to get approved, which was all about the banking, all about privatized banking and the infinite banking concept. And it was good enough to get me in the door, to get me a talk. But the time when I wrote my first draft of the talk and I submitted it, they hated it. They said, this isn't a TED talk. This, you're going to have to redo this. And I was baffled. I was like, oh, okay, what should I talk about? Now, I'd been embarking on a book journey to write a book for my daughter about the 6 laws of wealth, kind of like take the richest man in Babylon, but then bring it to today's time, take the principles used in that book and back in those days and apply them to today, but in a level that a 2.5-year-old, well, technically a 5-year-old, I guess is how I was framing it, could understand the lessons and the laws in the book. And that's where it began. The hardest journey was writing this TEDx talk, and I had a lot of help. I had Andrew helping me. I had Gabby just totally carrying the weight and getting me through it. I was just a miserable, mad, just confused person trying to write that. I couldn't get through it, and we did it. And just today, I got the email that the TEDx talk is live for the world to see. And I'm going to allow all of you the ability to kind of grab the YouTube video. It's right there in the chats if you want to check it out. And as we kind of wait for the rest of the crew to join on and get into some of the questions, I figured that would be a great way to kind of get this party started. But I'm going to go to the first question, and it comes right from Justin. Justin was asking when he came on this, he said, so how did you build this community? And that's an interesting one. Would anyone like to take that? Stephen, you've been part of it for the whole thing. How do you think we built this?
Well, I mean, staying very consistent and kind of putting the clients and putting the people ahead of money for sure. I mean, we kind of started out, let's give away all our best stuff for free. And, we've been doing, we do these 3 webinars every single Wednesday. We do Money Club Mondays. We do Tuesday evenings. We were doing one on Thursdays. We have a new one coming out on Fridays. Even our 3-day trainings, which, I've been around the financial education space for 15 years and have taught $60,000 3-day weekends before. And, the 3-day that we do is $300. And people come to it over and over and over again, and they tell me it's better than the $10,000 and $20,000 trainings that they attend. And so we do it for $200-300. And so I think that's a big part of it is we're very genuine. We're here for the right reasons. We're not here for the money necessarily. And I think when you're in it with your heart and you lead with that, I think, you come across that way. And I think people like that this day, especially this day and age. There's just so many, I know this isn't what the F, there's so much bullshit on the internet. There's so many liars and fake people out there. And that's not us. And hopefully, I think that's a big part of it.
And I think it's important. And the hardest thing is when I think people from the outside see what we have now with all the shows. I mean, I don't know, what did we figure out? We do 6 live shows every week, consistently and persistently. 1 YouTube video every day, 5 days a week. And I look back and I try to think like, where did this all start? And really it started with a book, Russell Brunson. I always screw those two up. Russell Brunson, the ClickFunnels hacker. He had a book, and I read this book. And in the book, I'm very visual, and I'm very much into stories. He talks about his potato guns that they used to make, and then they created a webinar that they did every single week, the same exact time, and it was an obscure time. And he recommended some weird times, which is where Wednesday at 1 p.m. landed. And he said, you just got to do a webinar every single week, the same time. And he talked about his journey. When he first did it, he'd have like 1 or 2 people on, but he still did it like there was thousands of people he was talking to. And he just never stopped. And they sold a ton of potato guns. And then as he went through, if you know his story, like he did this with all of the products, and it's how he launched. So I said, well, hell, I remember sitting in an airport. I was speaking a lot, so I had a lot of airport time. I was just sitting there on a layover, and I'm literally just writing all the notes for what became the Wealth Webinar. And it was just, we're going to do a webinar. We're going to teach the truth about money, and we're going to do it every single week, the exact same time. And Gabby, I don't even remember how long ago that was, but it was 4 years ago, where we came up with that. And then all these other shows like WTF, we do all these serious shows where we got to be nice and we got to kind of just go out there and like teach. And we just needed a show where we could just be assholes. I hate to say it that way, but WTF was kind of like, all right, let's use news. Let's do a recap of the news and let's argue with people. And that's what WTF was. It was just like the one place where we could go and we could just argue with people and just, I don't want to say pick fights, but I guess I've had my share of those back in the day when we had so many haters with the crypto and all that good stuff, and IULs for sure. And each one has just been like a build on to the community. But I will tell you, like a lot of people, like you go on the Wealth Webinar now, it's 130, 140 people or more every week consistently. Back in the day, what did we have? 2, 3 people? I mean, we would put on webinars every week for just a couple people. And that's how you build a community. You just do it slow and steady. And that's how we did it.
Love it.
What's up, Hannah?
What's up, dude? Happy New Year.
Happy New Year. How was your podcast?
That was good. It was good.
Hannah, Justin, Hannah?
Yeah,
Nice
I was going to say, who's Justin?
Oh.
Am I missing something?
Yeah. Well, Justin was on WTF today. He was on Wealth Webinar today. And Justin is the managing partner for a algo-driven hedge fund that is absolutely phenomenal, that I really need to introduce your dad to Justin and Justin to your dad. And you probably should meet him too and talk to him about what he does, because his story is pretty awesome. Yeah. His story, is a roller coaster like many of ours, where had money, lost it all, had money, sold the company. And now, we're in the process right now. I got Jonathan Whipple designing those new AUL policies for Justin and his wife, and getting them all set up on his banking system.
Copy. Okay. Because actually the name does sound familiar, but I'm going to be honest, the face doesn't. I've been nosed in all of the recording today. So pleasure to meet y'all. And hey, everybody. Hi, the rest of the team.
Hello,
Hey,
HJ.
All right. So let's see. Do we have any questions that have come in yet? Let's see here.
No, but I think Janet's comment is interesting. She said she remembers when you started the Wednesday Wealth webinar. It was April or May of 2020, and it was you and Brent Kessler.
Oh my goodness. What 2020? I feel like it was before then though, but maybe the idea was before, and that's when we started. I don't know. Years.
Yeah, maybe. I think we went like real hard when 2020 hit, because I remember having big long office meetings of next steps, and I think that must have been one thing. How are we going to ramp up Wednesday Wealth webinar? Because everybody was stuck at home, so we were just trying to find a way to reach people.
Yeah, that's awesome. And that's where MSTV came out of. Actually, MSTV came out of me and Steven being out at an event that was Disney, right? We were in Disney.
Orlando,
Yeah, Orlando, putting on an event. And that was the day the president, Trump shut down the entire country. And we're sitting there twiddling our thumbs being like, oh, shit. Like,
now what? Our
entire business model just fell on its face. And I remember literally we had all these iPads, which was for the back room, sales. And I said, grab the iPads, turn them on. And I didn't know how to use technology. And I'm like, just find Facebook and find Instagram. And everybody grabbed an iPhone or an iPad. And I sat up there and I just kind of laid out like we were going to take our entire roadshow virtual for people, because we knew that it was going to kind of be a long road. And that's how we did it.
Stephen, I know we had this a couple times. David and Dorothy, they're asking about the Tuesday's webinar and how they're able to log on.
Yeah, we didn't do one last night, but they should get the emails. The Tuesday one is going to be a Zoom, so it'll probably be like every other week for a while. But you'll get emails on it. In the next
Stephen, do you want to announce like that other show that you're going to be doing on alternative investments?
Yeah, we'll start one on Fridays, Friday afternoons, Friday afternoon Eastern time. It'll be on just alternative investments. So everything ranging from what we do with infinite banking to private money club to precious metals to hedge funds to algorithms and everything in between. But just want to talk all things alternative investments and answer questions, have fun with it, similar to private money club. Money Club Mondays, but a broader topic range as far as alternative investing. So that'll be another fun one that we do.
Dexter's like, now you need a Friday, what, a Monday, a Tuesday, a Wednesday, and now a Friday, and
we deliver.
We got a lot of new stuff coming out, a lot of things to share, and to me, this is going to be one of the most important years of probably the next decade for a lot of people and financially. So if we can get the message out there quick and now and have people listening, I think we'll be able to help a lot of people this year.
Awesome. Hey, Gabby, the one comment that just came in from One Real Truth, can you make sure you grab that information in the bio so that we can reach out and talk?
Yes.
Awesome. All right. Well, Hannah, I know you had kind of a unique thing, and I kind of wish you had saw the wealth webinar, because you dig what Justin does. I mean, it's wild. It's right up our alley. Like in terms of like, we're all super risk averse. We don't like risk. We don't like losses. And, you love it. So I would urge you.
Don't you worry. Because I know all of those recordings get uploaded to your YouTube at Chris Noggle on YouTube. Go follow, click that bell icon, click the little notification to get notified when he posts.
Smash it.
Am I going to get a bill for that ad?
I'll bill you.
Well done.
Oh, I love it. And Carson's coming in watching from the airplane today. So what's up, Carson? Glad you're on. Carson's on our team as well. All right. So should we start with this really cool question that you have, Hannah?
Yeah. Well, let's get into it. I don't think Mike's going to hop on. But
you want me to draw, right?
Yes, it would be good to draw it. And I think, Steven, can you make Chris like the big video? And all right, this one was just interesting and good. Oh, Mike said he's here. Hey, Mike.
Cool.
Okay. So I thought this one was good just because it really dives into cash flow and practical uses of the policy and how it fits into the puzzle pieces of what you're already actively doing. So I'm going to read this kind of word for word. So he has a HELOC right now at a 3.75 with about 127,000 of it is in an outstanding balance.
How much was it again?
127. I have a loan out of his IBC policy that's 18,000 and 5% simple interest on that one. He's going to be getting his principal back soon on a private money deal that he did that was earning 15%.
Oh, nice one.
How much he's getting back is 50,000. And my question is, well, here, I'll have you draw that and tell me when you're ready.
I think I got it all right. Am I missing anything here? I don't know what the loan for 18,000 was referencing or about.
His IBC policy. He may have used, this might be good information, Mike. I wonder if he used some of his 18,000. I think he used his 18,000 loan to pay down some debt, or he used it for his private money deal. Either or, he has 18,000 outstanding from his IBC policy.
Okay.
My question, yeah, it was for a deal. All right, yeah, he put it into a deal. All right, his question is, would it be smarter to pay off his IBC policy before he pays off the HELOC since it's in higher interest? And I'll continue. If I pay back my infinite banking policy loan, I would use about 18,000 of the 50 that's coming back from his private money deal. Then the remaining money would go to pay off his car loan that is about 3.25%.
Okay, but with the car loan, so again, with cars, it's really a cash flow play. How much is the car payment?
Mike, write in or text me here. So how much is the car payment? And then something to keep in mind as well, his next premium is coming due in March. And he said his car payment is $298 a month.
Okay.
Okay. So basically what he's asking is that what's the best use of this lump sum dollars and money that's coming back to me? I got
this dollars right here, right? The 50K?
Bingo. Yeah. Okay. Now he does have premium that's coming due in March. Okay. And he was thinking about using some of that 50,000 to help pay for premium. I believe, Mike, you are actively working, right? Are you bringing 50K originally came from his HELOC? I think Mike does have active income that's also coming in, but here's something I just kind of want to touch on real quick. Follow my brain, because Mike thought this was weird when I said this, but I want to explain why, because I haven't explained to him why I said this. But sometimes what I'll do is I will save up money for my premium inside of my IBC policy, because I say this all the time. Your policy is nothing more than just your glorified savings account. Why save the money inside of my conventional savings account? I'd rather just save that money inside of my infinite banking policy. And I'm talking about like my annual premiums, right? Like my annual lump sum premiums that are coming due. So if he really wanted to, and he kind of just wanted to prep and be in a savings mode, he could just pay back some of the principal of his IBC money and have it sit there and save, because premium is coming due in March. We got about 2 months. What could you do with that money in 2 months, right? I personally would maybe just hold on and save some of that principal in the policy, prepping for next year's premium. The other thing that I told him is that I was also thinking, take some of the 50,000 and max out his PUA. So let me explain PUA real quick, right? So PUA are your paid up addition riders, right? So those are the booster rockets on your policy. And when you overfund or you max those things out, you're contributing to the ongoing compounding inside of the policy. So I was thinking maybe max out the paid up additions, And then don't pay back the principal of the loan on the IBC policy. Use the rest of the money to get rid of the car loan, right? And then keep using the HELOC money and his IBC money and go find another private lending deal to create a more cash flow.
Yeah, I mean, they're all great ideas. I mean, you could spin this thing a lot of different ways. I mean, the number one thing is to keep money moving. I don't disagree with anything you said. I mean, you already found, a deal at 15%, and then you got another deal down here, or maybe these are one and the same. I'm not really super clear on that, but I mean, so how I do it, like a lot of people do the annual premium, which I totally understand. Most of my policies, I think one is annual. All the rest of them are either monthly, and I have one quarterly. And I do that because how I do it, and I'm just going to explain how I do it, is I make sure that all my money from IBC is out working in deals like this between 12 and I think mine go between 12 and 18%. And then I take some of this interest when it goes back to here, I'll just show it on mine. So if I know I got a premium coming, a lot of my premiums are monthly, so it's easier for me to do this than you. I just take my IBC money, and I'll just do this segregated account, and I move it into private money club deals. The income that comes in from the private money club deals, I park back in the segregated account. And then I'm kind of a nerd, but I always take it back and do a loan repayment for whatever the dollar amount is. So whatever this income is, I'm usually doing that. But let's just pause on that for a second. What you could do is just take this income, save it up here. When the premium comes due, the segregated account could fund the monthly premium. Okay, so you're literally funding your premium with found money because your money's working for you. This is kind of what Justin talked about, how he buys cars. He puts the money in his hedge fund. Then his hedge fund produces an income that's sufficient to pay his car payment. Same idea. You're putting money in the IBC. You're sending it out to work in a deal. The interest that you're earning in the deal is coming back to the segregated account. And then from the segregated account, you could literally set up, the premium mode to be monthly, and then you fund it that way. That's how I do mine. But coming back over here, I don't think there's really any bad way you just said. I mean, taking the money and putting it back in the policy and then using the policy to fund premium, not a problem with that. At 375, I mean, is this an intro rate or how long is that going to stay? That's the only concern I'd have.
Actually, that was one of my questions too. I don't know.
Because I mean, that's low for right now. I mean, if this is variable, we better brace for impact because you're heading probably to about 7.5 on that. And then in that case, like it doesn't become a question of whether we should pay the HELOC or the loan to the IBC office.
So I think it's locked in 3 years for 3.75.
Wow, he's got himself a good one right there. All right, so I wouldn't even worry about that then. I'd be using some of this money right here to pay the minimum payments on that. That's what I would be doing. Okay. So I would take some of this 50 grand and then, some of it could fund the PUAs for the premium or kind of like what Hannah said. The income from these private money deals, I mean, I don't know where that's going. Is that you just spending that? Is it just getting used or are you sending it all back to the policy? Because I mean, this is kind of the missing thing I don't know about is how is that being utilized? I always take that and I put it back into the policy as loan repayments. This is definitely a priority. I would get rid of that. I mean, I know it's a low interest rate, but $298. Yeah, it doesn't sound like a lot's owed there. There's so many different ways you could spin this, but I don't think there's really.
He was paying the HELOC back with the private money club income.
Yeah, that's perfect. I mean, that's exactly how I would do it.
Okay.
I guess one of the questions I'd have is that 50,000 going to go back into the HELOC and you're not doing another private money club deal because at 12 to 15%, you can just keep that going.
I think that the 12 to 15% deal is paying off, which is why the 50 grand is coming back. And he's saying, do I put the 50 grand to the HELOC? And I think we've kind of all agreed no. And, do we use some of the 50 grand to pay the premium? Okay, maybe. Do we use the 50 grand to just max out PUAs, which is kind of the same, as the premium because the premium is base and PUA.
Or could it be redeployed to private money club if you had enough money to make the premium? So
that's the thing is, with the premium, I always, when I'm hearing things like this, I'm always trying to not use the policy to pay the premiums. I understand what he's saying, where he'd rather have the money sitting there for the premium, but I'm always trying to make sure that however I'm doing my premium, that's new monies. Like this premium, I'm always trying to have that come out of my working income. So whatever money I'm working for, that's my premium. I know a lot of people do it different. They try to use, like they'll use their investments to pay their premiums, or some people use their policies to pay their premium, which I don't love, because it's just, to me, it just isn't your money working at its ultimate way. But if you don't have this as an option, well, then this is definitely an option for the premium.
Yeah,
totally like that he's using the 12 to 15 to pay the HELOC down. That's smart.
I hope, and actually, so he says, you guys friggin' rock. In all caps.
I don't know. I mean, I feel like there's just not a wrong way to do this.
No, here's my feedback. That's actually the answer. I don't think there's any right or wrong way to do it. It's just a big cash flow game. And at the end of it all, who's the one that's in control? Okay. So this is the fun stuff, because we're in control of it. So I guess what I would personally do if I was sitting here in this situation is I would take the 50,000, see how much extra I can max out on the PUA, save some as a loan repayment back into my policy, prepping for my annual premium.
That's a good way.
Use the rest of it. I don't know what's the total outstanding on the car, but maybe just wipe out the car, get that done, possibly. See that's where I would kind of go in and kind of figure out more of the numbers, because then I could easily go out and find myself a private money deal that could still pay for my car and my HELOC bill each month. So that's what I would just sit down and look at.
Yeah, there's just a lot of ways to do it. I mean, I just don't think this is too much of a concern. And right now, given the state of where we're at, if you're locked for 3 years, I would try to keep this money not paid back.
Yeah.
Because if the bank that you have the HELOC with decides to play games and tries to reduce your HELOC amount, they can freeze your HELOC, that money's already out. So you don't have to worry about playing the shell game with the bank. So I would actually intentionally try to keep, like I have a HELOC, and I just looked the other day, I think I have 39,000 available. And I'm like, I gotta find somewhere to get that money out, because when we get into this thing deep into it, which, me and Justin and Steven were talking about it on a wealth webinar, probably second, third quarter this year, we're going to start really feeling this recession. I think, unfortunately, I hope not, but I think some banks are going to have some major issues. And if the banks have issues, they're definitely going to go after HELOCs. And, as real estate values plummet, and it's already happening. I mean, shoot, I just watched a YouTube video about Tampa. Tampa real estate's already starting to take a hit, which I didn't think you'd see that much in Florida, but any appreciated area is going to depreciate. So that money should stay out, at least for as close to the 2 or 3 years that you got left.
Nothing gives me more anxiety than dead equity. So, for me, I just wouldn't even think about paying that car back, because it's cheap money, and then it would be dead equity if I pay it back. Whereas the HELOC's easily accessible, the policy is easily accessible. So if you're putting it there, it's temporary until you find the next deal, and just cutting down a little bit of interest in the short term.
Yeah, and this car payment's not a lot. So like that, that's why I asked about the car payment. So $298, I don't know what the premium is, but that's not really moving the needle probably very much. So I guess you could definitely make the argument on that. Like, don't so much worry about this as much, or use your activity of your money working for you to then pay the car down. Because if you're earning 12, 15 and you're paying 325, that's a nice little spread. Hell, you could.
Question: can banks change your loan rate on car loans?
No, I don't think so. I've never seen that.
Okay.
Yeah, I don't think so. HELOCs, they definitely can, because it's a variable rate, but most car loans are a fixed rate.
Okay.
Okay. On a little lighter note, Facebook users asking, what is non-direct and direct recognition?
Who wants to take that? You guys all know that one?
Does Craig want to do it?
Yeah,
Sure.
Craig,
Happy to jump in on that one. So those are two different criteria they use on how the loan is going to be recognized when whether it impacts your cash value or not. So if you're a non-direct recognition, when you take a loan, that does not impact your cash value as it grows. So it grows uninterrupted. But if it's direct recognition, when you take a loan out, that does interrupt that compounding function. That's how I would describe them.
Yeah.
Yeah, and you know, like we get that a lot. A lot of our competitors like to use direct recognition companies, which nothing wrong with that. I mean, we use Guardian and Guardian's direct, Penn Mutual's direct. We use both those companies, but when you use those companies, you really have to factor that in. That you know, in a scenario like that one we just did that we just drew out with like that money from the IBC policy being out, like he's not if it's direct, he's not earning the same interest rate we are in our non-direct because the dividend is going to be reduced because they're going to actually recognize the loan and they're going to reduce the dividend that's paid out based on the amount of available cash value minus the loan. Non-directs, which would be the One Americas, the Lafayette's. I mean, gosh, the Security Mutual, correct? They're non-direct, and the Mass Mutuals, like those, they don't recognize the loan, so it's game on. You're earning the same interest rate or dividend whether the money's in the policy or out of the policy. So it makes no sense to keep money in the policy in a non-direct.
Yeah, and Chris, as you and I discussed this earlier this week, I know the environment isn't great for cash value line of credits, but that's one of the strategies you can use with direct recognition, where you can use your life insurance policy as collateral in a bank that would offer you a line of credit. And so that doesn't really impact you on a direct recognition. So that's one strategy, but those rates are pretty high right now.
Yeah, you know, so I use cash value line of credit with Coastal States Bank. I got to do a wire to Justin. As soon as I'm done here, I got the wire form. Finally figured out how to do a freaking wire if I can get the email. But anyway, you know, like the cash value line of credit, I think I'm at 6.5. I didn't even look today. I'm scared to look, which is significantly more than I can borrow from the insurance company. I mean, the insurance companies, if you're with One America, it's like 4.08. And if you're with Mass Mutual, it's like 5 or 5.73 or 4, depending on when you took your policy out. All those are lower than the cash value line of credit. But for me, I have 9 policies. So I get to take all 9 of my policies and consolidate them into one central place, one checking account and one place where money comes in and goes out of. So I might be giving up, you know, 1.5 points, which is a fair amount, more than most people even get in their savings accounts. But for me, it's the convenience of it. And the way I look at it is it's still cheaper than me going out and getting a home equity line of credit or borrowing from a bank. So I feel like it's a win. Is it more advantageous to borrow direct from the insurance companies right now? 100%. But then if I want to do a deal, I got to take loans from potentially 9 different policies, which can be a pain in the ass. What else we got?
I want to mention Dexter's commitment to Ask Me Anything, because he's talking about, he says, you're not going to believe this, but I'm sure he was putting in text for having a peaceful Friday into the chat, and he was rear-ended when his finger hit just as he was typing. The person just hit him.
Oh, that sucks. Oh my goodness.
That's not a good first Wednesday then.
We haven't heard anything else since then. He's probably knee deep in crap already.
Now with direct, Chris, I have a question for you for direct recognition. So if our competitors are going with a lot of direct, and I've had people ask me this where they say just, you know, go and collateralize with the bank. But I've also heard the argument that if you're really practicing IBC, then the fourth golden rule is don't use third-party lenders. Right. So, I mean, is that something that we take in consideration? Is that, because I know that's how I think about it, is like we're trying to cut out using someone else's money.
Well, Jason, what you're saying, and it's the same thing Hannah would say about CV lines of credit. It's the same reason Brent has, 25, 26, 27, 20, 29. How many policies does he have now?
406.
He's got a lot, and he doesn't have a cash value line of credit, because if you really get down to the teachings and you really get down to the core roots of IBC, what we're trying to do is take back the banking functions in our life, not give up banking functions back to the bank with a cash value line of credit. So you could make the argument both ways. And I agree. Like I'm going to side more with don't give the banks the power. So it's, for me, I hate to say it, it's kind of pure laziness. It is. It's just like, I just love that convenience of having one central place that allows me to do more deals. And also to what you're saying with direct recognition, if you're practicing IBC, if you're putting money out there to work and that money's then coming back to the policy and paying the loan down, because if you're doing direct recognition, you do have to be a very honest banker and make sure that loan's getting paid down as fast as you can, because every time you're not being an honest banker, that's affecting your dividend. So I think if somebody's practicing true IBC like we all do, and really using it and making sure the loan repayment is getting done with the recaptures of the money from private lending or whatever your activities are, your opportunities are, then I don't know how big of a deal direct recognition is. I mean, we could split hairs and say non-direct is better, direct is better. And then it would just be like everything else in our lives, no, Republicans are better, no, Democrats. It just becomes like a, split down the middle. But I mean, at the end of the day, mathematically, a non-direct is always going to, outperform a direct if you're using the loans. But is it that big of a difference is the point that could be argued if you're truly practicing IBC.
Thank you for the extra clarity on it. I've just been curious about, because I get asked that question a lot, and I know we talk about it.
I get beat up by it. Like, people definitely come down, no, I can't believe you're using a bank. I'm like, to each their own, man. I'm busy, and it makes it easier for me.
So creativity and laziness. Good.
Correct. Probably more laziness before creativity, but who's keeping track?
Yeah.
Lazy workaholic.
There you go. I'm definitely not lazy. I'm just busy, but we can call it lazy.
Okay, this next question by Bayless there's kind of some layers here, but he says, is it possible for an amount less than $10,000 a year? I'm assuming premium. He's got a mortgage and he wants to apply the IBC system. In Romania, the income is much lower.
So you're in, let's see, this is Bayless. So Bayless,
Yeah.
If you're in Romania, correct me if I'm wrong, I don't think they have the same type of whole lives that we do here. Matter of fact, I literally just today, we dropped a YouTube video, and that YouTube video is, I'll give it to you right now because I think it'd be very beneficial for you. It talks about the infinite banking concept, but what do you do when you live in the UK, Australia, Romania, where you don't have a whole life? How do you actually practice the infinite banking concept if you don't have the whole life? Because I'm trying to get it into people's heads, and we always try to do this, that the infinite banking concept, the IBC as we call it, is not a product. It is not the whole life. The IBC concept is a process. It's a process of moving your money, kind of like what we just did a second ago. Sure, you don't have the central machine that pays you uninterrupted compound interest that's tax-free. I'm not going to go any further because I'll make you feel bad, but you can still do the infinite banking concept. And this video I just put in the chat there shows you how to do it if you're not in North America, because in Canada and US are the only two countries I know of that allow the whole lives to be built the way we are. And if I'm wrong and you have these in Romania, please let me know, because that would be a whole nother market we could start talking about.
So in the case that, let's say he is a U.S. citizen, is in the U.S., is it possible for an amount for a premium less than $10,000 per year?
Yeah, just 10 times your age. So I don't know how old Bayless is, but just add a 0 to your age, and that's your minimum monthly. And that's probably less than 10,000 because, 10,000, you'd be pretty old.
A very good dad joke. Thank you.
Yeah, I got a dad joke calendar for Christmas, so I'm ready.
Oh boy.
Go.
Things just got interesting. Christopher, he says he's been waiting on someone to contact him about getting started. Does anybody recognize?
Well, you don't have to ask twice. I mean, who do you want to talk to? I mean, you want to talk to Hannah, you want to talk to Steven, you want to talk to Jason, you want to talk to Craig. I mean, pick one of them. I mean, the only person you can't talk to is me. So I'll cut myself out of that.
Yeah, I won't allow that. Sorry.
Yeah, you got to go through Gabby.
We've got protectors. Ooh, I like it.
Okay.
Oh, wait, where is Gabby? Is she just off video today?
Yeah,
I'm off video today. I had LASIK last week, so my eyes look all jacked up. But I think Steven posted Dexter's comment. He says he's back. He exchanged info, explained this is a campfire no one should miss. Oh, he's dedicated.
We got Larry Steinhaus joining us too, but I don't want to get too far ahead because we got a couple questions before that.
Facebook user says, how can I find out more about Justin's hedge fund and how to invest with him?
Perfect. Well, I gave his phone number out by mistake earlier, so maybe he'll be nice enough to give you his phone number now.
Yeah, happy to do it. 410-458-8780. There you go. And the
easy.
website toptierhuman.com. You can see the whole suite of everything there.
Top tier, what is it?
Toptierhuman.com.
I like that.
That is cool.
Now I'm more excited.
I was gonna say that is kind of up Jason's alley.
Yeah, it's pretty cool. On
Justin,
that note, I'm going to say peace for today. I'm going to take Connor to Taekwondo, so keep it rocking all. Thank you.
All right.
Thanks,
Tell him to
Jason.
kick some ass.
See ya.
Literally. Hey, another person Justin should meet is Larry. Larry and Justin could definitely talk shop. That'd be an interesting conversation. I think Justin could handle Larry, and I know Larry could handle just about anybody. So I think those two should be chatting. You should, Larry, you should bring him on your show for
Larry,
sure.
you got homework.
You got homework.
Hannah, David, and Dorothy are asking, can they take money from their conventional bank and place it in their existing 4 policies and then take it out to invest at will?
Yeah. I mean, as long as there's a wiggle room assuming that, Dorothy and David, where y'all are at, you paid for your premium, policies are now active. Did we take out any loans? If we did, then there's wiggle room to put dollars back into the policy as those loan repayments. You could possibly overfund that policy. I bet there's some wiggle room that you can dump in some extra paid up additions, kind of maxing out those PUAs. But yeah, right? Because at the end of the day, the policy is nothing more than just your pass through that warehouse of your wealth. I hope I'm understanding okay.
Yeah, if not, just tune in and we'll answer more questions. But we got a lot of people, of course, at near the end, everybody's chiming in. So we've got Philip, he says,
holy cow, where'd they come from?
Philip's asking, what tools do you provide to show efficiency of policies? He already had an IBC policy for the last 5 years with Mass Mutual. He's wanting to open up more policies. He's trying to determine who to work with.
Oh, yeah. We got lots of tools. I mean, we got a whole team. We call them the mapping team or the tools team, and that's exactly what they do. They can show efficiency of any policy through a cash flow model that they do for you, and that'll show where your policy hits its efficiency zone. It'll show everything you're asking for. So as long as your policy was designed with us, you have access to the mapping team. If your policy is not designed with us, then start your next one with us, and then you'll have access for even all your older policies, and we can kind of build the map. So that's probably the best way. Or you just set up a call with somebody, have us review what you have. I mean, if it's already with us, then that's easy. 5 years with Mass Mutual, which right out of the hole leaves a lot of questions. Who designed the Mass Mutual policy? What policy is it? And definitely would like to check that out, but sounds like you want to open more policy. So either way, it's a win-win for you. I mean, our mapping team is, I always like to call us, that is our one white unicorn we have in this industry. As IBC gets more and more popular, there's more and more people coming into our space, and believe me, there will be more coming, throughout the year, I'm sure, because everybody, gets the popular thing and they want to jump on board. But we've been doing this a while, and I don't know a single other company in the IBC space anywhere that has anything even remotely similar to what the mapping team is, because it's expensive. I mean, the mapping team, what do you think that costs, Hannah? A couple $100,000 a year?
What's it cost?
It's expensive. Sometimes we're looking at it being like, well, do we need it? But yeah, it's our one thing we have to have because it's our one differentiator. So check it out.
Here you go. This one's for you, Justin. Ruth is asking, can your fund work well with Roth money?
Absolutely. Yeah, you can invest as an individual from any type of retirement account. You can do it from an entity as well. So yeah, lots of options there.
Yeah, I saw on the paperwork today, trust. You can do it as a 501c3, a nonprofit. Let's giddy up and go.
Yeah, may as well.
Perfect.
Okay, and David and Dorothy, the website got posted. It's toptierhuman.com. It's in the chat. Christopher Jackson mentioned he was waiting on the Cash Compound Brothers. He assumed Hannah works with them.
Yeah, they're part of our team.
Well, they're part of our team, but like if you write into the Cash Compound, just FYI, I don't get those messages, right? But if you write into the Money Multiplier, absolutely, I get those messages. So my email is just Hannah at themoneymultiplier.com. Hannah spelled the same way, forwards and backwards.
Okay.
Yeah.
Oh, go ahead, Chris.
I was just going to say, I kind of to that, I feel bad sometimes. I put all these YouTube videos up and, there's tons of comments and I never get a chance to go in and look at the comments. And I went in one the other day, how to design an IBC policy. And there was like 100 comments and there was probably 20 people saying, how do I get started? Who do I contact? And I'm like, wow, I'm really failing at this. It's like, we got these YouTube videos and like, they don't even know how to get started. And then I actually go into the replies and there's a whole bunch of other IBC people coming in and trying to poach the people that are watching my videos. So yeah, we got to do a better job of that, folks.
Okay, Drew is here. So he had a pre-submitted question. So I'm going to revert back to his. Okay, Drew, I will do my best. So Drew's older brother is a U.S. citizen living and working in Switzerland. His wife is German citizen only. He's interested in getting a policy on himself and his wife. However, he's concerned that the dividend payout would or might not be considered taxable in Switzerland, so making things more inefficient. Number one, I'll start with this one. He says, would he be able to get a policy since he doesn't have a local U.S. address?
No.
What if he used Drew's or his parents' address in the U.S.?
Possible. I mean, I use Brent's address to get a One America policy.
He does have a U.S. bank account.
Sorry, probably should have said that. He does have a U.S. address?
A bank account. He's got a U.S.-based bank account.
So he's technically has a U.S. address and technically has a U.S. bank account. He'd have to do his medical here. So you'd have to be here in the States to do the medical at the address that's on file. I don't know. What do you think, Hannah?
I mean,
a little gray.
So it's just, it's just jumping through the hoops. Got to have a U.S. address, have to sign off on the paperwork, the application here in the States, have to do the exam here in the States if it's required. But other than that, I mean, you can go anywhere. I mean, if you change, honestly, like, I can double check this, but I mean, even if you go and change your citizenship over to like another country, I mean, that contract, because again, these policies are contracts. So at the end of it, you're already locked into that contract. So if you go elsewhere, that contract is still effective as long as you pay your premiums, right? I mean,
that's
now
true.
What's another option? Let's say, if he couldn't get a policy on himself or his wife, if Drew or their parents, they had a policy on them and they transferred ownership to him, is that a possibility?
Absolutely.
Yeah, you can always change ownership.
Okay. So even if he's not in the U.S., that's an option.
Yes.
Correct.
Okay. So then there's a second part. So then
just premium has to be paid from U.S. dollars in a U.S. bank account. Okay, which wouldn't be an issue in his case. So the second question is, would they be able to do a workaround the Swiss tax consideration if Drew was the owner of the policy on him and his wife, on his brother and his brother's wife?
I can't see why the tax thing would be. I mean, we can't give tax advice, but I can't see if the policy started here. I can't see why there'd be any tax situation because these are private. Remember, they don't need to be reported. They're non-taxable. So I don't know where the tax implications come into play. I think you'd probably have to talk to a Swiss CPA and ask them about that. But I don't see how that would be an issue. I really don't.
So advice would be to try it and see what happens.
What the hell? Give it a whirl.
Okay. Drew, hope that was helpful. Let me know if you have any questions. But Kira is asking, her first question is, after the first policy, are consecutive policies quicker to establish?
Somewhat. Yeah.
Because you got the medical out of the way. So you can use the medical, 12 months?
Mm-hmm.
12 months, you can use the existing medical. So you don't have that hurdle to jump through. They have the records. I don't know. I mean, I don't know how much faster it is. It might save a couple weeks. It definitely would save a ton of time if there was APSs and things that need to be ordered, then you're talking about saving 30 days there. So it's definitely faster. But No matter how much we push these insurance companies, nothing seems to move really fast.
Number two, her second question, is there a reason that some of you have policies through different companies, or is it just personal preference?
Diversification for me. If I'm going to talk to clients about different companies and recommend different companies, I feel like I should own them. So that's why I've done it. The only company I don't have right now, and I love this company, is Lafayette Life, because Brent hasn't been kind enough to allow me to live at his house again. But when that day comes, I'll probably try a Lafayette policy next. But I've got Security Mutual, Mass Mutual, New York Life, One America, which is by far my favorite. I think I got them all. One America, yeah.
No, same reasons. Same reasons.
Just to hop back to Drew, his brother's concern was that the dividend might be considered income in the Swiss eyes.
You should watch Dave Ramsey bash infinite banking and talk about the dividend specifically. He says the dividend isn't a dividend, it's a return of unused premiums. Thanks, Dave. I guess the insurance companies are way smarter than your dumbass, because that makes the dividends tax-free. It's a return of premiums not used. Thanks, Dave. Dave is such a dick.
Okay, not you, David and Dorothy. Speaking of, they have the next question. When is the new policy coming out, and does it minimize death benefit?
The new One America policy that we've been talking about for a little bit. I think that's probably what the One America one. It does minimize death benefit, but not a lot. It's like nothing I've ever seen. I mean, it's already out. We're using it now. We're just not promoting it because it's. Well, ask Justin. I don't know when did we meet last about yours, and you still haven't got the plan design. They take a long time to get the plan designs done. So that's the only reason, we're not rolling it out yet, because it's clunky to design. It takes a lot of time to design this, but when it is designed and we got it working, it's like nothing we've ever seen. Number one, the guaranteed column, with no dividend and the non-guaranteed are very similar because of the way the design is. It gives you all the benefits of the early cash value like a 90-10 would, but gives you all the stability of, a 75-25 with more base. So you've got a more efficient policy in the later years. It's with One America, which is the most IBC-friendly, mutually owned insurance company out there, and they're 100% dedicated to this. And they have the lowest loan interest rate right now, as far as I know. So yeah, it's ready to rock. Just whoever you're working with, just let them know you want to design one of those. And we don't really have a name for it. We got to come up with a name for it.
Well, explain real quick why it's taken so long to do it, right? Because you're working with the actuaries of the company.
It was something that me and Brent sort of embarked on a mission, and Stephen was part of it too, where we wanted One America to be more competitive in the large case space. We were doing $1 million policies, and we wanted, who did we just lose? Did Hannah just lose? Yeah, anyway, she'll be back. In the large case side. And also we wanted One America policies to have a higher early cash value, which were two things we couldn't get with One America. We couldn't do the big policies, so they'd have to go to Mass or to Lafayette, and we couldn't get that super high early cash value. We're maxed out at 85 to 87% in a perfect day, almost like a perfect sailing day. So we went to the company and said, hey, listen, if you want how I did it, I literally was transparent. I said, look at how much money you're losing. And I showed them what I put with Lafayette. I showed them what I put with Mass Mutual. And it was, where were we in Hawaii? Where were we at? Aruba, right, Stephen? Aruba?
Yeah, it started there, and then we talked to him up in Indy at the end.
Yeah, that's right. So it started, poolside, and we luckily had the president, the vice president. We had everybody that matters, and they were all drunk. So it was a perfect place to have this conversation with them because it was poolside. So that's where the conversation started, and now it's actually happening. So it's just not finalized yet. So we're kind of doing it case by case. And I think the hardest thing is right now we have to have One America's team. I mean, Jonathan's amazing, but he's one person. We have to have them design them. So our team can't design these we do all the other ones. It's really just their team designing them, it just makes it clunky and slow to get them done. But when they're done, I mean, there's just nothing else that we have. or that we've ever seen that competes with it.
Okay, I just want to mention, I think it's funny because Craig was like, oh, we might go over an hour. And Steven's like, no, thank God, we can't go over an hour. And now it's like, we've hit an hour. So we're going to be like super rapid fire if everybody's still on board. Charles Rodriguez, he said he did his medical through Mass Mutual and was approved in the beginning of December. Since then, the agent has not gotten back to me. Can he call Mass Mutual himself or switch agents to finalize it?
Yeah, just call us.
Cool. Easy. Okay. Peter, do you have to do a health screening when applying for kids? He's got a daughter who is 19, a son who is 17, and a daughter who is 14.
The 19-year-old, yes.
Well, possibly.
Maybe.
Yeah,
I mean,
yeah. We could probably do an or what do they call that? Accelerated underwriting.
Accelerated, yeah.
Yeah, I think we could get them all issued in a matter of like 30 days with no medical.
Oh, and Charles Linus said that he's going to get somebody on it for you.
Just real quick, did y'all know? So I always pronounce Linus's name Linus, but it's pronounced Linus. So I love that.
I did not
know that.
Yeah, yeah.
Linus.
And Linus, and y'all will see some emails from him. So he's an application specialist on our team.
Justin's like, I'm actually Justine. That's good.
Okay, David.
If you have time.
David says, "Can I move his teacher retirement account money to open a policy?"
You can, but I don't know if that'd be your best course of action. I think we'd probably want to look at maybe self-directed IRA accounts before we go direct to the policy. And really, David, what it would take is just looking at the account that you have, talking to your CPA or tax professional to make sure that it doesn't screw you from a tax side. And if your CPA is like, hey, this is the perfect time to do this, then yes, then it would make sense to go direct in. But we got to get over that tax bump that you're going to get hit if you liquidate that. And I don't know how old you are, but if you're over 59 and a half, we got another 10% early withdrawal penalty to deal with. So usually anyone under 59 and a half, it's very difficult to make that make sense. So the self-directed IRA positioning would work much better. And if you go self-directed IRA, you can still go into things like, like Justin's hedge fund. You can still lend to private money club borrowers. So it kind of is very similar to everything we teach. It's putting you in control of your retirement dollars without having the tax hit.
Paul is asking, how does one go about finding the current loan rate from the life insurance company?
Usually Google's pretty good. You can always ask us. We're always trying to stay on top of it. I mean, now that it's a new year, some of the companies are changing things up, but yeah, we usually know what they are. We're getting texts today from Brent on all the loan interest rates, but Googling it, I don't know, you might have a hard time.
It should also be on your annual policy statement as well, so you can check there.
And you can always call up the company and ask.
Andrew is asking your thoughts on Penn Mutual policies. You mentioned earlier that they are direct recognition, but he's not sure how he feels about that.
Well, I'm going to just take a stab. I might be the only salty one with Penn Mutual, and it's because I got some information a couple of years back about Penn because their illustrations looked so good, and sometimes when things look so good, they're too good. So I went to somebody that I knew that understood Penn, and I'm like, how is it that Penn Mutual at a lower dividend scale is able to beat all the other companies with their illustrations? And what I was told, whether it's true or not, but I mean, I think it is the way that Penn Mutual calculates future numbers in their policies is not based on the same fundamentals of all the other companies. So let me explain this. So if the dividend right now with, we'll just use Mass Mutual, for example, is 6%, right? When you look at an illustration done by Mass Mutual this year, every year from now until you're 121 is going to show a current assumption, which means they're going to assume dividends are 6%, which is great because we're at the lowest dividend scale in the last, I think, 34 or 35 years now. So we're at the low point and interest rates are going up, which means dividends will go next. So it's nice to look at it there, but Penn doesn't do current assumption. I don't know what they use. It's probably some algorithm that they've come up with that kind of calculates where they think the dividends are going to be, which makes their illustration look good. And hey, listen, I'm not in this for the short game. If I was, I'd only show Penn Mutual illustrations because everyone would look great. But I have to answer to people in 2 years, 5 years, 10 years from now. And when they're looking at their illustration and we're looking at their current in-force illustration or current statement, and they're saying, hey, why is it that when we did this, it said it was going to be this much, and now it's not that much, and the dividends haven't really changed? What happened? And that's just a difficult conversation to have. So that's why I don't like Penn Mutual, and plus their direct recognition, but they are a good company. There's no question. Hannah?
I mean, no, I don't. I mean, my family owns policies with Penn Mutual. I have a podcast episode out there called "What is the best insurance company to work with?" And I would go listen to that, because in my opinion, yes, insurance companies do matter, but it's not the overall factor that would dictate why I would work with one company over the other. Just like how we came back and talked about we're diversifying, right? Not putting all of our eggs in one basket, where I got some people who like to be all with one company just because they understand how that company operates, their online portal and everything like that. I like Penn. I think there's a homey vibe at Penn. You know, I call them up and I always get directed to someone there. I don't really have a preference, to be honest, but yes, they are direct recognition. So if I ever have any outstanding loans, my direct policies are the ones that I pay back first. I don't know. Does that help?
Yeah, I think it's good. Steven, anything on, do you like Penn?
I don't know. I'm ready to talk about Mexico or something. Maybe some
Actually,
no, when it comes to the policies, no, I'm just waiting on a couple things, and I'm going to be starting several new policies, and I'm going to use a few different companies just to spread it around with the companies we sell. So I have no problem with Penn at all.
Mm-hmm.
Okay.
It's going to be my first choice, but I have no problem with it.
I guess there's a couple more questions, but we're already like 7 minutes over. So we're just going to wrap up with this last comment by Drew. Everybody else who has questions that didn't get answered, put it in the pre-submitted form or just bring it to next week. But Drew said, fancy policy names, trademarks pending, The Rock, the end-all be-all policy, and one bitchin' policy.
I like The Rock.
The Rock.
AUL Rock. That actually would be a cool name. You guys like that?
The Rock is such a funny dude, man. I watched a Disney movie with him in it the other day, and it was hysterical. Black Adam, I think it was called. Like a superhero or whatever, but he's just a funny guy, man. So I like The Rock. That's a good name.
I like it.
Tiffany Charles is ready for Mexico.
Yeah, it's absolutely.
Justin's going. Chris is going. I'm going. Hannah, you going?
Absolutely.
No.
Sammy, you going to Mexico?
Hannah's not going, but Tiffany, you'll get to meet
She
Justin.
is going, just not with us.
Yeah,
don't you have
a point? She's going to be at the same damn place, but with somebody else.
I just booked my flights today. I'm staying an extra day too. So if anybody out there, I think Tiffany's staying an extra day too, actually. But stay until Tuesday. So
yeah, same here.
That's a good one. It's sold out, so you guys got to get in for the next mastermind. We should have those dates. Let's get those dates, Chris, for the next one.
Yeah.
They're starting to sell out
Friday.
fast. We have to do some extra ones this year.
We'll have more information after Friday.
We'll figure it out.
And then how about this? Can I just real quick talk about the 23 and 23 with our upcoming ones?
Yeah.
So check out. They will be.
Hannah, you're muted.
God, I was talking too. We're like,
I'm playing. Go ahead. Go ahead.
Okay, I thought I was muted for the whole time. I'm like, oh my God, I guess
That's what you get for that text you sent me earlier.
Somebody should revoke Steven's admin rights.
Oh, we're just now talking about that. Oh God, where was I at? So we will send out emails. They will be posted on the website, themoneymultiplier.com, and up on the homepage you'll see that events calendar. We update and upload those events almost daily. So check it out or email us. Okay, so we're coming out to 23 different towns this coming year.
It's gonna be awesome. Wait till you see the marketing behind it that we've been working on. Woohoo!
Have fun. All right. Thanks, y'all.
All right, folks. Well, there's a lot of people and a lot of questions. We apologize. This is like one of the first ones where we weren't able to get all the questions. So make sure you pre-submit any questions we didn't get this week, because we'll definitely pick them up next week. And for everybody, thank you. Happy New Year, and we will see you next time. Justin, take care, man.
Thank
See
you.
you guys.
So.